Welcome back. With the lockdown easing globally, commodities prices across the world have been jumping across the international scenes and the local market. The head of research at the financial derivatives company, Damilola Akibami, is here to unpack the latest in the commodities market. Good morning, Damilola. Thanks for coming on the program.
Good morning, BC. Thank you for having me.
Now, let's begin our conversation with oil prices. Now, of course, Brent is actually trading, excuse me, just below $30 per barrel. And well, why is Saudi Arabia planning to actually cut output by 1 million barrels to 7.5 million barrels in June?
Well, what Saudi is trying to do is actually trying to encourage its peers to also voluntarily cut their own production just to boost oil prices, because it's now clear to everyone that, look, at current level, this is not favorable. And it's funny because Saudi Arabia a month, 2 months ago was pumping oil into the markets when it was engaged in a price war with Russia. And now it's actually voluntarily cutting its production by 1 million barrels per day. And that's aside from the 9.7 million barrels output cut that was agreed with its allies last month. And that just shows you that definitely the country too is facing the pinch of the coronavirus pandemic and lower oil prices. This is a country that is the largest oil exporter in the world. It has net foreign assets of almost $500 billion. Its cost of production is even the lowest at about $2.80 per barrel. So definitely the country needs oil prices to actually increase. But since its announcement yesterday, we've seen oil prices still trade around $30 per barrel. So it hasn't really had that much of an effect or impact on the market. And that's because the fundamentals are still supporting low oil prices, in the sense that we still have low demand, despite the fact that China is now resuming activities gradually. Demand is still very low, and the market is still oversupplied with oil. So we need to see more cuts, deeper cuts, before you can actually see oil prices increase to, let's say, about $32, $35.
But is there a stability of price in sight at $30 per barrel to prevent a review of Nigeria's budget assumptions, for instance?
Oh, well, with what Saudi is doing, and we know that even Kuwait started cutting its production even before the May 1 deadline. So if we see more oil producers voluntarily cut their production, and like I mentioned, now that economies are resuming activities, what we actually need to see is a pickup in demand more than a supply cut, because those supply cuts are already there and the market is still not reacting to it. So we need demand to pick up in China, in India, in US. We know that the US recorded a contraction in its Q1 GDP growth. Its unemployment rate has spiked to the highest level since 1929. So we need to see all those oil consumers start to demand for more. And for now, yes, oil prices will remain around $29, $30 per barrel, but we need an increase. Year to date, right now, the average is about $40 per barrel. So that's still, we still have a little headroom above our budget benchmark. But if the fundamentals do not improve, Nigeria might have to adjust its benchmark price downwards.
And talking about Nigeria's adjustments, now the Naira has been very volatile lately. Is there any hope of stability in the near future?
Oh, well, you need to understand, like any market, definitely there will be some volatility. And what is causing the volatility in the forex market right now is weak investor sentiment. The market is dry of dollar funds. We've been talking about oil. Our reserves level have been declining for a while, although in the last couple of days, we've been seeing that increase. And we know that even once the IMF funds of $3.4 billion hit the market, we should see an increase. Although, again, you have obligations. So it's like an in and out situation. So that is what has been causing that uncertainty in the market. And we know that the CBN has resumed its dollar sales of $100 million a week, but that is like a drop in the ocean. So it hasn't really moved the market. And, you know, investors too are aware of what happened in 2016, if there's going to be a repeat. They're wondering if like capital control is going to be introduced. We know that a lot of banks now have reduced the amount of dollars you can withdraw using your MasterCard from $1,000 to about $300 right now. So that fear and uncertainty is actually what is driving the forex market. And that's why we're seeing it around 430, 450, if you can even find it to buy. The non-deliverable forwards, which is like a futures market, which gives an indication of what is going to happen, is trading around 530 naira to $1 in the 12-month market. So there's a lot of uncertainty, and it's because there's still scarcity of dollars. And bear in mind that fine, there's like an easing of the lockdown in Nigeria, but once things improve and you know that and people start to fly again and schools resume, the demand pressure is going to pick up. And if your demand pressure is increasing Meanwhile, your forex inflow is reducing, definitely. So that's what investors are anticipating, and that's what is causing the uncertainty.
And you talked about the futures market just now. Last Thursday, it actually crossed 500 naira at the FMDQ exchange. Is there any idea of what can trim that?
Okay, so like what we've been talking about is the uncertainty. So there has to be an improvement in your forex inflows, and some of the sources of your forex inflows or proceeds which have been down. Dollar remittances, I talked about the US unemployment rate. So if people are unemployed, if they're laid off in developed economies like the US, obviously the amount that will be remitted home would reduce. So that actually is what is causing the uncertainty. And even at the IEFX window, that market used to see trades volumes of as high as $200, $300 million. Now, on the average, you barely get about $50 million. So there's a lot of dollar scarcity, and that is, in the near term, let's say in the next 1 month, 2 months, it's highly unlikely that there'll be any change to the current fundamentals.
Now, let's look at the NBS report showing the household consumption of food jumped 56% to 22.7 trillion naira in 2019. Tell us about the drivers.
Okay, so what we've seen, according to the NBS, that overall the aggregate household expenditure increased by over 85%, about 40 trillion, and the bulk of it, 56%, was on food. So it just shows you the pattern which the average consumer in Nigeria spends his or her income. So most of it is on food. And after that, you have transport and health. And it also is reflective of the consumer price index, wherein we see that the food index actually accounts for about 51% food and beverages. So it just shows you where consumers actually spend most of their income. And when we looked at the data from the NBS, we realized that actually their expenditure from rural area was actually higher than urban, and what they were spending on more for the rural, they were spending more on health, transport, and services, while urban was more on education and transport. So you could see, obviously, in the urban areas, there's more priority or focus on education and transport. If you are living in a place like Lagos, definitely you'll be spending a lot on transport because of the traffic. So those are some of the drivers that we're seeing. And in Nigeria, to calculate the poverty rate, you actually use the consumption per capita. And according to the NBS, we've seen that the poverty rate is now at 40%. And that just shows you that, obviously, there's still and the Gini coefficient is about 35%. So there's still a lot of income inequality. The poverty rate is still relatively high, but although if you compare it to the last time a report was released, it was about 60%. So the government, to an extent, is doing something in the right direction.
Now, let's talk about the power sector now. It actually lost 57 billion naira to the gas and grid constraints. Can you talk us through that?
Yeah, so in the power sector, prior to now, it's actually been driven more by gas, because of we were in the rainy season. But now that the rains have started, we expect to see more of hydro power. And so the constraints have been predominantly from the gas and from the grid. But in all fairness, since the pandemic, to an extent, there has been some improvement in power supply. And so far in May, we've seen that the average power supply has been above 4,000 megawatts. So we expect that to improve once we get neck deep in the rainy season, which is around June, July.
I'm sure many Nigerians will be happy about that. Now, let's talk about the stock exchange now, which is down 1.66% in 2 days. And year-to-date losses are at 10.77%. And month-to-date, of course, still looks good enough to get even the recognition of Bloomberg over the weekend. But what are the drivers for this performance, and how long can we possibly see a stability in the market?
Prior to now, about just before Friday, when the market lost, prior to that, to last week Friday, the market had gained for about 9 trading days. And so that rally was actually driven by the fact that, I talked about the forex market, that investors actually are trapped and they don't have enough funds to, they don't have enough dollars to repatriate their funds. So most of them were now investing in some stocks, just at least so that they're not sitting on idle cash. But now it seems like that rally has fizzled out, and that's why we saw that the market lost on Friday and also lost yesterday. And most of these stocks are actually falling way below their market value, and they are now inching up gradually. But now it seems like the negative market sentiment is beginning to weigh on the market's performance. So this negative performance may continue for the rest of the week.
Now, let's look at the easing of the lockdown now. In Lagos, the governor, Babajide Sanwo-Olu, has said that the lockdown could be reintroduced if violations persist. I'm sure that you've seen much of that since last week. But do you actually agree with his position, or you think otherwise?
Well, you have to balance it because there's the position of safety and health. There's also the position of the economy and growth and output. So depending on which side you sit on, you would argue your point. But the thing is, you need to balance it. Nigeria is not as strong as other economies. We've heard of a lot of economies where the government is giving its people palliatives. I know in the US, they're giving them about $1,200 to each household and all that. But the Nigerian economy is not that strong, and we're not financially strong enough to actually support in that way. So I understand where the government is coming from by allowing some companies, some businesses resume, because a complete shutdown would be devastating for the economy, for companies. We know that a lot of them are already laying off staff. We know that a lot of them are already cutting salaries. So if that continues, we just talked about the poverty rate. If the poverty rate increases, if unemployment rate increases amidst the rising inflation, that's a recipe for social unrest. And we've heard of areas where there's increased robbery and theft. So you have to think of that. Now, on the health and safety aspect, it's not just the government's responsibility, it's the responsibility of everyone. The government has said that face masks are compulsory. Everyone needs to adhere to that. The social distancing, things like so. If you actually balance it, if you adhere to the preventive measures and protective measures that have been put in place, I want to believe that to an extent, the spread can be curtailed and we strike a balance.
Now, with the postponement of the AFCFTA to January 2021 now, what could be the likely impact on commodities trading within Africa, especially with the land borders which are still shut?
Yes, so with the postponement of the implementation of ACTA till probably next year, obviously the first thing is that the benefits that would have enjoyed have been delayed. So benefit, for instance, like having access to about a $1.3 trillion economic bloc, having access to a market size of about 1 billion people, a boost in trade of about 15%. So all that have been stalled as a result of the pandemic and the lockdowns that have been imposed by several countries. And we've actually been discussing, analysts have also been discussing, like if this AFTA agreement was in place prior to the pandemic, that it would have actually helped a lot of African economies, because one of the objectives of the agreement is to actually reduce African economies' reliance over dependence on non-African trading partners. So, and we know that there's a lot of trade going on for essential services. So if that agreement was in place, these are some of the benefits African economies would have been enjoying at this moment. So definitely it will impact significantly on commodities. And even Nigeria, before the pandemic, as at August, the borders have been closed. So what exactly, even if the pandemic ends and and you can travel and trade resumes, what then happens to the borders? Is the government going to reopen its borders? And so there's still a lot of issues that need to be finalized and fine-tuned before the implementation, successful implementation of this agreement would occur.
All right, we need to wrap up this conversation in just a minute. But before you go, just give us an outlook on agri-commodities in less than 1 minute.
Yes. Okay. So what we're seeing for the grains, we expect that the pickup in demand in China would help to support prices. And then for cocoa, we're seeing that improved weather forecasts, weather conditions in Ghana and Ivory Coast are supporting production. And if there's an increase in production, that would push up reduce prices, rather.
Damilola Akibami, Head of Research at the FDC. Many thanks for coming on the program.
Thank you, BC.
And just before we do our market review, let's backtrack a bit, bringing you the price of crude oil. Of course, we talked much about it on our commodities market. But of course, this morning they're slightly higher, and that's after an unexpected commitment from Saudi Arabia to deepen production cuts in June to help drain the glut in the global market that has grown as the coronavirus pandemic crushed fuel demand. And Brent crude futures were seen trading at $29.85 a barrel earlier on, reversing some of the previous session's losses. And US WTI crude futures were up 1.7% at $24.52 a barrel after touching a high of $24.77 a barrel. Now, Saudi Arabia had said overnight that it will cut production by a further 1 million barrels per day in June, slashing its total production to 7.5 million barrels per day, and that's down nearly 40% from April.